we could see a real meltdown and a real disaster, which would mimic, 08, 01, go back to 87. Any one of those, we could see some devastation here.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz from Bubba Trading. Bubba, thank you so much for joining us today.
Elijah, always great to be with you. And of course, obviously, we believe in liberty and we believe in liberty and justice for all.
Definitely, 100% there. And what we're seeing right now, it is a question of what impact is this going to have on liberty? I mean, it seems like with a monetary system that can be inflated away, that really limits people's option of how do they have something of real value that they can protect their wealth with. And right now we're seeing inflation at 8.6%. This is a new high. We haven't seen this kind of inflation since 1981, so it doesn't seem like inflation is topping. We're continuing to see higher numbers. Your take on how this is really shaking the markets today?
Well, the first thing I would think, Elijah, is if you multiplied that number by 3, you might have the real number. I mean, just take a look at the prices you're paying in the store. If you can get food or if you can get stuff, it's much more expensive than the 8.1 or 8.5% that they claim. As far as our liberty is slipping away on a daily basis because we do very little about it. We're only as free as the government allows us because the fiat currency system around the globe, not just here, around the globe is fraudulent. Okay, it is a way for governments to give you taxation without representation, and this is what's creating a big part of this inflation as well. You may think you're making more money, but your money goes nowhere near where it went just even a year ago. And this is going to continue to get worse because we have a government here that wants to do nothing about it. They could certainly solve a lot of and ease these problems by going back to fracking and shale producing, but they refuse. They have no desire because they are literally trying to bust out the middle class.
Now, some of the root causes of this inflation, I mean, you're mentioning the lack of supply of oil, which is pushing up the oil price. What are some of the main root causes why we're seeing this raging inflation right now?
Well, the biggest cause is obviously oil, and we could still be a net exporter. If we go back to right before the election, oil was $35 a barrel. Now it's $120. So we've got this. We've got the government that gave away all these stupid stimulus packages, which are ridiculous. And now they want to talk about giving away and paying for loans, college loans, which is, again, that's all inflationary. And the only way they can do that is try to inflate it out of the system. So there's so many things. And then you have to bring in the supply chain, right? You got China, who I think is deliberately torturing the United States of America because they can, because of course we have a very weak leader right now. But I go back to the Shanghai shutdown about COVID. I don't think it had anything to do with COVID. I think it was done intentionally because I think they're trying to pressure the United States, just like they told the United States they better stop talking trade with Taiwan. So there's a lot of problems in here that are hidden that we never hear about. Food shortages are coming. What's that going to do to the price of food? I mean, if we don't have a good year planting and a good year growing this year in the United States, we have big problems. There's already riots right now in the Middle East. Okay, so if we don't grow, because Brazil and Australia already had bad years, they didn't produce enough. And with Russia and 30% of the wheat crop out, it's going to be a big disaster.
What is your perspective on how the markets are reacting today? It seems like, the stock market is selling off. We're seeing gold and silver rally. And it seems like, we had you on last time and you said that we were going to see a 60% crash in the stock market. It seems like we're headed for that. We haven't yet made a new low on the Dow, but we're super close to that.
I think we're going much lower, Elijah. I think 40 to 60 is an easy call. And again, it's not going to be in one day, right? We're going to have these bobs and weaves, as we've just recently seen, a rally from the bottoms, and now we're headed back to the bottoms again. The NASDAQ is in a lot of trouble. The tech stocks are getting hammered. This is almost a replay of the late 90s, early 2000s, before they went into the toilet. there's a lot of things that don't make sense and are not logical here, which is going to create a much bigger sell-off. And now with the rates rising, as the 10-year gets over 3 and closer to 4, you can bet that a lot of money will come out of equities, because there's a lot of people that would be happy with 4% on a 10-year note instead of being stuck and taking the risk of the equity market. You're talking the retirees and older people that have been forced in these markets for years because there was no place else to go.
Now, we have the Fed possibly raising rates next week, and also in July, people are expecting possibly a 0.75 point rate hike instead of the 0.5 point rate hike. Your perspective on that, how do you think the Fed will react to this raging inflation, but also, the stock market seemingly collapsing right now?
Well, the Fed kind of created this raging inflation, right? Let's call a spade a spade. Ben Bernanke should have raised rates in 2013. He shouldn't have backed down in the first place. So now we've got rates going higher. But remember, now everybody's got to remember this. This is an important fact. The rate that the Fed is talking about is the lending rate to banks. Okay, what we pay, we're already paying. If you get a mortgage, it's 5.5 or 5 3/4, very soon on its way to 6 or 7, and we're going higher. Interest rates have to rise. The demand is out there, and now with everybody so debt-ridden and continuing to spend like, as they say, drunken sailors, using their credit cards, whatever, you're going to see a massive debt bubble once again, which will be the final propulsion that will really push this market much lower.
When you mention the debt bubble, can you expand a bit on that? What do you think that will look like when that pops?
First of all, if we go back to 2008, I think the banks are in big trouble again. Okay, this is my take. I think the banks are overspent, overlent, and the fractional banking of 10 to 1. They lifted those restrictions for a while, during the COVID and during that time. So these banks are much more leveraged than they should be. So I think they're going to be in trouble. I think the consumer is got so much debt right now. We went from a period that we're saving to now that the economy's opened up, they've spent all their savings and they're back to using credit cards. So now you see credit card debt is at record highs, and how are they going to pay for it? Okay, where's the money going to come from? And this is the real problem that we continue to go through. It's like that vicious cycle. But if the Fed's going to continue to bail out banks, which they should have not done it in 2008. If they're too big to fail, then they shouldn't be in business. That's the way that I look at it. But of course, they will once again, which is going to create what? More taxes for the citizens of the United States.
You see a reversal from the Fed? Is that what you're saying?
Well, I think the Fed's going to. No, I think the Fed's going to go ahead and raise. They're forced to raise. If President Biden and this administration does not drill and pump oil, then the Fed's got one choice. They have to raise the rates. If the administration would create more oil, it would bring our inflation down. It would take some of the pressure off the Fed. Flying at record rates, as you can see, and you said in the opening, 1981 was the last time we saw inflation this high. Who was the president just before that? Jimmy Carter. So we're back into this, stagflation period. People aren't working. You get all the jobs you want. I mean, they're paying triple minimum wage, but yet still nobody wants to work. This is such an ugly disaster pending that it's only going to get worse because this administration really doesn't give a rat's ass about the country.
Now, a lot of people we have on this channel say that fundamentally the reason for inflation is the increase of the money supply. And really, maybe the catalyst for it is the lack of oil. But this increase in prices was going to happen anyways, regardless of what eventually caused it or was the catalyst. Fundamentally, the reason for it is the increase of the money supply. Your perspective on that?
Well, I don't disagree with that whatsoever. I think that's correct. I mean, so you always have to ask the question: is it real or is it Memorex? Right? When you see the pounding of the money supply, so was the market really up, or was it up because it was artificially pushed up on too much money? And again, that's all part of it. But we could have prevented a lot of it going back to oil. But I'm in 100% agreement that the money supply is overflooded because, again, what do they care? It's just more debt that eventually they're going to try to inflate themselves out of. And who's going to end up paying for the debt is the middle class. So this is the problem that you continue to have. It's the ongoing battle of garbage. And it's garbage in, garbage out like a computer. And that's what we have right now. We're giving garbage information and we're getting garbage out, which means that we get tortured.
Now, you've said that oil prices are just going to continue to rise from here. I mean, we're almost near the highs we were, back when Russia invaded Ukraine. And we saw that first increase in oil prices or gas prices really shocked the nation there. It seems like you're saying it's just up from here, though.
It's only just begun, Elijah. I would say the all-time high, I think, was 147. I think we blow through that eventually. And look, I don't like to make these kind of statements, but I do believe that there's a real outside chance that we see $200 a barrel because we're not going to have the supplies. And remember, when you give your enemy, even though they're supposedly an ally, the power to control your supply, all they got to do is choke off the supply a little bit. What's going to happen? We're going to see prices dramatically rise once again. And again, the rally itself had nothing to do with Russia and Ukraine. That was just an excuse at the time. We were already over $100 a barrel when that took place. We had already tripled from the time that President Biden has taken office. And, again, when you're going to choke off Americans on some stupid policy of green energy or climate change, which, again, if it is, I'm not a believer, but let's say it is. You're 40 years away from finishing that project anyways, and you don't have the power grid to handle it. So why are you killing the country when you're trying to, get forward? Because they don't care. They want the rich. They're looking for Marxism or socialism, and this is the exact opposite. You hear them talking about tax the rich, tax the rich. They don't want tax the rich. They want to bust the poor, bust the middle class, and let the rich do their thing.
Now, what investments are you looking at right now as we're seeing this inflation that just seems to be getting worse and there's no end in sight?
Well, I mean, look, Elijah, I always buy equities. I'm pretty heavily invested in equities, but I do hedge them, right? That's one of the things I do is I've got a model that hedges, and I've got a lot of equities, but I'm protected to it, X percent on the downside. I mean, I think gold's a good play here. Again, remember, longer term, I trade gold, and just full disclosure. Today, my trading position is short gold, but I hold more gold in my drawer, in my safe, than I'm short on the board, right? I'm a believer in gold. I'm a big believer in platinum. I think platinum is probably a hell of a play down here, because it's still really, in my mind, underpriced. And I could get cheaper, right? But, I think those are the plays. And I think it's time to start taking a good look at the cryptocurrencies as well. Because, look, let's face it, people are getting frustrated with the power that the Fed has and that these governments around the globe have. It is becoming very, very scary. And I think some people are finally waking up to the fact that this manipulation and this fraudulent action by central banks around the globe is not good for the economies anywhere.
It's so interesting because people debate about whether precious metals are manipulated or other markets are manipulated. At the end of the day, regardless of what those interventions in those markets are, what the truth is there, the Fed is intervening in interest rates and controlling the monetary system, which really is manipulation at the end of the day and impacts all these other markets.
Well, 100%. See, the difference between gold and silver, people, listen, I get letters about that all the time. Every time I write something, I get nasty letters about the manipulation. I go, okay, great. Except there's one thing. You have to have price discovery. And if you're going to try to manipulate lower, you got to have buyers. If the buyers didn't step in, the prices would go much lower, wouldn't it? So, but the difference between the Federal Reserve and precious metals is very simple. They can create through the back door, more money for the government, which means that really your dollars are worth a lot less. Precious metals are worth what they're worth, and they're a hard asset based on, what they're worth and what you can sell them for. So again, I understand there's some directives and some things that go on, but as far as major manipulation in precious metals, I'm not an agreeer. I'm not a believer. I think that, again, yes, there is some pressure. They sell a lot of paper, but at the end of the day, Elijah, I don't think there's enough gold in the world or silver in the world to cover the amount of paper that's out on the street right now.
I know we've covered this in previous interviews, but for those who are watching for the first time, if you could explain what that means, because I think that's a pretty interesting statement that there's more paper out there than actual metal to cover it.
Well, yeah. Well, ETFs and options are created, as a derivative to a general market. Okay, so you've got GLD as a gold ETF, GDX. You've got a bunch of ETFs that buy and sell, and they trade. And of course, they have to have equal balance, right? There has to be a buyer for every seller. But I think they put so much paper on the street when they're selling that I think if everybody took their certificates and said, okay, I want to turn this into real gold, I don't think there's enough. I think what we've done is we've oversold. Part of keeping a cap on price or trying to is to continue to sell the paper because you don't have the physical to sell, so you have to sell the paper. and you keep trying to push it down, I think that's what you're really seeing. I think that brings us to, that there's too much paper been sold to the amount of gold that actually exists in the world.
And it's interesting what you say you're doing is you're playing the paper market, you're short gold at the moment, but you're also accumulating physical gold. Can you explain the importance of that in your mind?
Well, I think there's nothing like owning a hard asset, right? I mean, when you own paper, you own the paper, it's worth the paper it's written on. Okay. When you own physical, I can touch it, I can feel it, I can smell it. I can't eat it, but I can do everything else with it, right? And, paper is, if the ETF decides to reverse split, to do it, whatever they do, they have power, very much similar to like the Federal Reserve. They can manipulate around the paper asset because it's controlled versus the free market price discovery of real physical metals. Hard assets have great value when you own them. When you try to represent them through derivatives, you are always subject to something going wrong at some point.
And a question that we get often is the allocation of gold versus silver. A lot of people are more bullish on silver. Your perspective on that?
No, I like silver. Look, I like them both. I mean, does silver have a bigger chance for a much bigger return over time? Probably. I mean, look, it's a $20 asset versus a $1,800 asset. So, could gold go to $2,500 and silver go to $40? Yeah. Okay. So, and I think if you ever get back to the gold silver ratio, I think that would bring it in. But I'm bullish both, right? And I'm really bullish platinum as well. But I think that, if you look for to buy tonnage, people like to buy tonnage. They want to buy a lot. Well, how much gold can you buy at 1,800 versus how much silver you can buy at 20? So I think that silver is very bullish and it does have other uses other than just, as a potential currency. But, that's what, a lot of people are saying, but, gold is still a staple, as is silver. And right now the ratio is pretty wide. I think it was about 90-1 right now, and we'll see. But again, I'm a believer in both, but I can certainly see people saying that they think silver is going a lot higher. But remember, they've tried to squeeze it in the past too, and that has failed as well. So we'll see what happens.
All right. Well, last thoughts on the markets going from here. I know recently you've been saying it's kind of an interesting market. We're seeing a lot of sell-off in the stock market. We're seeing a bounce here today in precious metals, but there's low volume in a lot of these trades. Your perspective on the low volume we're seeing in the market right now and what you're expecting going forward?
The low volume is a concern, and it's basically from every market, whether it be equities to gold to grains. Every market we know has very light volume right now. So you're seeing a lot of artificial moves. I think that you're going to see volume continue to decline. I personally believe that this is more of a retail type push. And I think that what's happening is the commercials and the big funds are trying to let the retail buyers buy them so they can sell them to them and then tank them down hard. And now, again, I don't think they like what's going on here, so I wouldn't be surprised to see, not today, but at some point next couple of days, probably a rally, because they want to keep the excitement going, because I think they really want to sell. I think the picture is very ugly for the near future. And, obviously we've got the election coming up, midterms, but overall, we could see a real meltdown and a real disaster, which would mimic, 08, 01, go back to 87. Any one of those, we could see some devastation here. And I think a lot of poor people are going to be stuck in the middle of the meat grinder before it's all done.
So really what you think is happening right now is the big money is trying to get out of the stock market.
I think they're trying to get short the market. Not only trying to get out, I think they're trying to sell it. And I think that they're kind of sitting back, and we just had a nice big rally until the last couple of days, and we came all the way back off the bottoms, and we're spiking higher, and the trends were changing, and people were kind of jumping in, and then all of a sudden, bang, here we are once again struggling. But I think that's what you're seeing, and I think that they don't want to push the button to sell right now, because I think they know that the market will collapse because of the light volume. So I think that's what you're watching right now. But overall, it's a very bleak picture for the markets at this point. Again, I believe in them long term, but over the next 6 to 20 months, we could be in real trouble.
All right. Well, Bubba, thank you so much for joining us today. Your website is Bubba Trading. Can you share with our viewers about that and any last thoughts you had?
Yeah, it's BubbaTrading.com, and they can any questions you want to hear my opinion. You can email me at BubbaTrading.com, and I think I offered it once before, but if anybody wants to come on my Monday night strategy call, just shoot me an email, and I will send you a link, and you can come and hear me rant and rave for an hour and a half on markets and what we're looking at. And I actually look at a bunch of specific assets as well. So it's great to be with you, Elijah.
Thank you so much, Bubba.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.